Yo, what's going on, boys and girls and ladies and gentlemen? I'm not a financial advisor. This is not a financial advice. If you want to join my live streams, I've been having some banger live streams lately. Click the link in the description, click wap.com. You can join my live streams, watch me live trade every day. I teach a lot of education, do a lot of education, alert stuff, do everything. We have fun in there. So, yeah, and then last night for the Apex 90% off sale, literally buy 5 accounts and just practice trading those, okay? So helpful. Link in the description for that too. Alright, so I'm going to be going all about inversions, everything you need to know about inversions, and I'm literally just going to use today to review and how I use them, because today was so amazing using them, and there's some that failed that people are probably like, oh, why'd this fail? And I'm going to explain why, okay? So this is not hindsight. I literally live traded most of the day, so this is all live time. Obviously, it's hindsight, but you just gotta trust me. All right. So again, this is gonna be very, very valuable information. Okay. So the first play of the day I took. Okay, if we go to the 1 minute and we go back to, actually before I start that, I just want to say, so I have been bearish the last few days. Okay. And the main reason is two things. One, we closed below a very textbook daily fair value gap. Okay, you can see we close it now. It's an inverse. And two, we have held the mean threshold of an order block twice now. Okay, so to me, this looks like a market maker sell model down to this low, which is the next low I want. Okay, and that's why I've been bearish the last few days. Okay, so that being said, I was more interested in looking for short setups, but there are occasional long setups where I will counter scalp trend. Okay, but this is key information to know. The daily bias is bearish as of right now. Okay, so if we go to the 1 minute, okay, whenever I look for an inversion, I'll use Euro USD for example. Okay, if I go to the low, there should be a setup down here. So whenever I look for an inversion, just like in my thread, I look for some sort of low to be swept, okay, which would be this low right here, okay, and it has to be a very, very obvious low. See how this is very obvious? If you back away from your chart, it's very obvious. You can see it from 10 feet behind the screen. And then I look for a bearish fair value gap. In this case, this is me, bearish fair value gap, to deliver to sell side liquidity. And I look for that to be closed back above. So in this situation, we get a bearish fair value gap. It goes down the sell side, and then we close back above it. Okay, and there's your long. Okay, so that is how you use a basic inverse, and this occurs in every single time frame. Okay, sometimes it's not an obvious low. Sometimes it's a random low, and you get the inverse in hindsight, and you're like, okay, well, we swept the random low and got an inverse. Maybe it's still a good setup. But this is the basic of the inverse. And the difference between this one and other ones is, see how this is not a series of inverses? See how like all this is a series? You always want it to be just a singular one. Okay, see how this is the singular one? So if we go to like the 3 minute time frame here, I have to go back a little bit. See how in like the 3 minute time frame, see how there's this one right here and this one right here? Okay, that means I'll go to the 5 minute and I'll be like, okay, let's see if there's a single one in the 5 minute. And indeed there is. Okay, but and then if there's a single one in the 5 minute, I'm like, okay, let me just make sure there's not one in the 15 minute, which would trump it. And there is. Okay, now let me check the hourly. Okay, there is not one in the hourly. So the highest fair value gap on the highest time frame is the 15 minute. So I use the 15 minute. And you cannot use a 1 minute or 5 minute close if you're using a 15 minute inverse fair value gap. You have to use a 15 minute close. So this right here, you have to use a 15 minute close. So if like the 5 minute closes over this is not a valid long. It has to be the 15 minute. If I was using a 5 minute inverse, then it would have to be the 5 minute. Okay, nothing else. Okay, so that's another key information. So the key information for inverses is, I like a bearish fair value gap sweeping some sort of low, or a bullish fair value gap sweeping some sort of high. Okay, and then I look for those to be inverse. And the key information you have to know is it has to be a singular fair value gap. Okay, a singular fair value gap and not a series. And if you're taking the inverse, it has to be the same time frame close. Okay, so that's the key thing. So let's say you're using like an hourly fair value gap. See how the zone is kind of big? Okay, If the zone is too big or it's too big for your typical stop loss, what you want to do is you want to now go to the 5 minute, or even I'll just go to the 3 minute in this example, and you wait for the 15-minute close, which may be right here, and then you look for like a smaller setup. Okay, so in this example, you can see here would be the smaller setup. We close above in the 15-minute. This candle closes above in the 15-minute. Okay, how do I know this? It's because this is 10:45, and we know that 15-minute closes every 15 minutes. So this candle right here, this is a 10:45 candle, right? And it closes above. So now we look for a second setup, and this is the 3 minute. So now we're looking for the same thing, another inverse, which is right here, gets closed above, violated, and then now we form the new fair value gap. Okay, new fair value gap, a new inverse, and now we long this. So see how this is a little tighter of a stop loss rather than longing this giant zone? Okay. That's why I do, so that's only if the zone's really big. However, if this 15-minute zone, if this was smaller, like this size, then sometimes I'll just blindly long it, okay? And yeah, I'll just blindly long it, okay? If it's big, I go to the smaller time frame, see if there's a setup with a smaller stop loss. Okay, so that's the first part of the video. So today's example, we know that if you look in the hourly, okay, I talk about this in my bias video. Where are we delivering from in the hourly? We hit a high, we barely displaced over it. Okay, you can see we only wick over it, and you can see we rejected it. And even if you didn't catch this in live time, it's good to notice this in hindsight. Okay, because if we're delivering from a bearish fair value gap, any bullish PD array on this side of the curve will not be valid if we are delivering from here. So in today's case, that was the case. So the first play I took of the day was on MNQ. Okay, I took it on a live account. I saw we inversed this, which, see how there was two inverse fair value gaps here? Because there are two inverse fair value gaps, I did not take this one because I don't like to take the ones with multiple. But then what do you notice? After bouncing from this fair value gap, we got another inverse right here. Okay, we got another inverse, and you can see it's the confirmation set up off the first one. Okay, so in this example, you can see we close above. Okay, we close above right here. We get another inverse, and I long this wick. And I actually sold at this high. I didn't try holding higher because at this time, I was kind of bearish because, again, like I said on the daily, there's a daily order block, so I was more bearish at this time. So I sold at this high. I longed here. Okay, so that was a decent scalp play. Okay, there is a short I took. Okay, I think it was on the 5 minute, I believe. It was actually on ES. 1 second. So it was this morning. It was right. It was on the 1 minute actually. Right here. Okay, see how we violated this one, right? See how this candle. See this one. It actually took two candles to close below. This one we closed below. Okay. And then boom, inverse fair value gap. See how this lines up? And this is actually, I think this would actually be a BPR, but I just use these terms interchangeably because of this. I use them for the same purpose. I know some people get mad at that and be like, "Oh, you don't know what an inverse versus a BPR is." Okay, I use them interchangeably. I'm a good trader. Okay, terminology I could care less about. All right. So, anyways, this is an inverse. And where do you target? You target the data lows, which would be right here. Okay. So here are the data lows, and these are always good targets because there's like sometimes voids at the bottom of these because of how quick they went down, and they'll end up getting filled. So that was my target. It was the most obvious low, okay, and I shorted that. Okay. So if we go back to the 1 minute on Q, okay, let me just verify just to make sure I'm talking about the right play I took. I posted these executions on my Twitter. I see. Okay, the other play I took was I took this one and I'm on Q. I actually did, so I longed here. I think it was based off the 5 minute. see here. Actually, no, that was a 1 minute chart. So what I did was I actually longed, I longed this wick. Okay, I did not long this wick, but right here I longed. Okay, see how we close above, we wick back in, and then you target the next high, which would be right here. This is the next swing high. So there's another 20-point move, right? And 20 points is very good still. Okay, a lot of you are like, oh, that's a scalp. Okay, that's 20 points. A lot of people kill for 20 points in NQ. Okay, that's almost 5 points in yes. All right, so those are the 3 inverses I took this morning. Okay, now just to review, if we go to like the 3 minute right here, okay, we have another inverse right here. Okay, why does this work so well? It's because we took this low, we purged the low, and we retrace into an inverse. Okay, so here's another textbook inverse. We know we purged the low, so should this work? Yes, it should. Same thing with right here. Okay, we purged the low, right? We purged the data low, and you have an inverse. Okay, and in this situation, a lot of people struggle with targets. I typically target like the next high, the next major high, so this would be it. And then if I want to hold a runner, let's say, I'll just look to the left of the chart and see, okay, where's the next major high? And to me, it would have been this one right here. So I probably wouldn't have held past this, but I always look for like major highs, especially if I'm trying to hold a runner. And you can see this is a major high over here. So again, imagine if you went to like the hourly time frame. You would not see any of these highs and lows. You'd only see this high, and you'd only see this low, right? So they have to be obvious highs that you could see in a higher time frame. So in this situation, if you took this inverse off the 3 minute, you would be targeting this high and then just hold like your runner till this high. Okay, next play. Okay, we got another one, and it was also on the 3 minute. Okay, you can see we had a textbook long here, but then when we hit sell or when we hit buy side and redelivered from a bearish fair value gap, we should not expect this to work. So what are you expecting it to be used for? An inverse. You can see we closed below it, we never wick back into it, and then finally we wick back into it, and then look what happens. We just go right to the next obvious low. So here's the other entry right here, and then you're targeting the next low, which would be right here. Okay, it's not any of these lows. It's not any of these lows. It's always the major swing low, which would be where the mouse is. Okay. Again, I can't explain how like textbook today was, but it's a couple other ones. We had really nice equal lows on MNQ, which if you were on my Twitter, you probably saw me post this live stream. But on NQ, there's equal lows right here, so we kind of targeted those. The next inverse, this was not really a good play. It wasn't really an inverse or anything, but I would say this was a good kind of short right here, because see how we got a lot of displacement. We knew the daily draw was lower, so remember, you have to keep in mind the daily draw was lower. We knew the daily draw was lower. We got a lot of displacement. We cut through this fair value gap, and we cut through this fair value gap up here. Okay, and we also failed to make this an order block. So that's 3 PD rays kind of being violated. Okay, and especially with the daily draw being lower. Okay, the sign of this being violated is kind of telling me, okay, we should go and draw down to this low. And this candle, you've confirmed it. Okay, and then we get a nice short here, but this wasn't a good short in my opinion, because we already hit sell side. If you look closer, we actually got a good long. So another inverse model, right? What's so good about this one? We took out this low. We also took out this low. We got a single candle displacing through a bearish fair value gap. Okay, and as soon as I see this, boom, I'm longing. I'm targeting the next major high, and in this case, there'd be 2. There'd be this one and this one. So I'm targeting the next major high. Those are the ones I'm targeting. Okay, and you can just see another inverse example. Again, right here. Okay, can't explain how much this repeats so much. Okay, right here. bullish fair value gap. We're delivering from a bearish fair value gap, so we already know it's bearish. We close below. See how we close below this candle? See how this candle closes below this? We wick back up to it. There's your inverse entry. Now that this was respected, we should not care about these bullish fair value gaps because they're on the buy side of the curve, and we should just target the next low, which would be here. And if you were trying to hold a runner and zoomed out to the hourly, you would have seen the next major obvious low is here, so you probably could have held a run until there. So there's that, okay? And then it provided us with another inverse entry, this one right here. Okay, see this candle close above right here, and then it barely wicks down. See how it barely wicks down? And in this one, we actually had low resistance liquidity to the upside. So this one gave us extra confluence. Okay, and typically for this one, I would not have held this high. I'm only targeting this high because it's like a high made in a fair value gap. Those are really good targets. But you can see we hit a low. We inverse this fair value gap. It's a singular fair value gap, so it's a good video, or it's a good fair value gap, and you target the next high. So this would have been my final target, and this probably would have been my first target because it's such a major high. So there's that, and then we inverse this again. So we inverse this bearish fair value gap or bullish fair value gap. It's the only fair value gap here, so we know it's good. Okay, and you can see as soon as we close below it, we get another candle close below it, and then this one wicks into it. Here's your entry. Stop loss is always a close back above the inverse, and then you just target the next low again. So you would target down here. Okay, and you can see this played out very nicely. This one, why doesn't this one work? Okay, but why does this one work? Okay, so this is a good question. So if we take a look at NQ, and we know sell, let me make this bigger, and we know sell side's down here. Let's go back to the 5-minute. Okay. This long works right here for two reasons. Well, one reason. It's because we hit such a major buy side here. And we weren't really close to this yet. So I was assuming we'd at least get a retracement here. Okay. So that's why this long worked, because I was assuming we'd at least get a retracement after hitting this low of 843. But this one doesn't work because see how close we are at this point to this line. So at that point, you should kind of expect, okay, we should go to this black line. It was a previous day low, it was an hourly low. We're so close. Versus here, we already kind of swept an internal low, and we weren't that close to this yet. So, and you had low resistance liquidity up here. Okay, I know you're doing this one too. But this one, the difference is how close we were to sell side. So this is why this failed. And I almost took it, but I checked hourly, and I'm like, okay, we're pretty close to the low. We're probably going to hit it. And then you can see we inverse this, what's the problem with this one? Okay, this is not a good one. Why? Because there's a series of fair value gaps, and we don't like those. So let's go back to the 3. See how you can make it into like a single fair value gap here? So this one I like. And you can see we close above it. We close above it, and we wick right into it. Barely ticks into it, but we still did it. And now you're just targeting this low resistance liquidity, this trend line liquidity. You target this high, and then you target the next high, and then after this, that would be it. Okay, because above this high is what? A fair value gap. So you don't know if it's going to break it or not. So we got another inverse here, and see how you have to change time frames to look for the single fair value gap. Okay, so that's important to note. And then, last but not least, right here. We had a bearish fair value gap there. We knew we had low resistance liquidity setting up. So I said this in chat, but I'm basically like, if this 11 or 1440 fair value gap gets inversed, we should run the highs. Why did I say that? It's because we were barely displacing below these short-term lows we were making, and we were delivering from a bullish fair value gap down here. Okay, so with the low resistance liquidity up top, okay, and us being so far in discount, and us delivering from another bullish PD array, I figured, okay, if this gets closed above, we'll probably go to the next high, which would be this high right here, and this high right here. Okay, so, and see how this is a singular fair value gap, right? There's not multiple, it's just a singular fair value gap. Do we get any other fair value gaps in this whole thing? Nope, this is the only one right here. Okay, if you just pause the video, there's no other fair value gaps here besides this one, so this is the one I used. And then we'd obviously get the textbook long entry right here with a new fair value gap made above it. So yeah, that's about it for today. Okay, so hopefully this gives you a sense of what fair value gaps are like taking. Most of them I like to make sure it's a single one and we swap some sort of low or high, and then I target the next higher low. Okay, and then the stop loss is always a close above or below. Okay, close above or below, above a fair value gap. Okay, if I long an inverse and we close back below it, I'll get out. If I short an inverse and we close back above it, I'll get out. So if I long this fair value gap right here, I would have gotten out if we end up closing under this inverse. Okay, so 20-minute video, went a little longer than I thought, but again, this is a very good video. If you can get this model down, it's so useful, I promise. So it's made me very successful, I will say that. So again, this is the video for today. Let me know if you guys have any questions. These are very important to understand. I do have a thread on Twitter about it, but hopefully some of this will, hopefully this video for you visual learners will help a little better. But yeah, other than that, have a nice rest of your day, afternoon, morning, wherever you live, and peace out.